Hi everyone, and welcome to the video how to stack the odds in your favor with super seasonals. And this is lesson 1. And if you have perused seasonstocks.com for any length of time, you quickly realize that there are many seasonal opportunities each and every week. Hundreds, sometimes thousands of opportunities exist. And many of these seasonals are absolutely tremendous opportunities that you can take advantage of. But there are seasonal opportunities that are shown that might be nothing more than data fit optimized stats during a short period of time. And so this video shows you my secrets to helping determine which opportunities have a much higher probability of revealing a true super seasonal opportunity. Now, there is no way to tell which opportunities present the highest probabilities and which ones don't simply by looking at the short-term stats alone. But that's where we start. So seasonstocks.com lists them all. So when you go onto seasonstocks.com and you see all of the opportunities, those are short-term stats, anywhere from maybe 1 to 3 weeks, and we list them all. We don't make any effort to try and determine which ones at this level, which ones most likely are actually uncovering a seasonal bias within that stock. So when you open up seasonstocks.com, you will be presented with a page listing all of the opportunities that exist for the upcoming week. And so at the time of this video, the upcoming week is October 15th through the 21st. And this is the process that I go through in order to begin to narrow down the number of opportunities that I'm going to consider. So the first thing that I'm going to do is I'm going to hit the show filter. Okay, I'm going to hit that button and I'm going to show filter. And what that's going to do is it's going to bring up a filter. And the only filter that I'm going to run, and there are many different filters that you can run, but the only one that I am going to run is I'm going to require a volume minimum of 300,000. And so I'll put 300,000 in that blank or in that spot. And I don't care about if it's a lot of volume. So that's just going to be the minimum volume. And then I'm going to do data since 2002 because we do list opportunities that only go back to maybe 2007, 2008, 2009. And generally, I want a little more information than just the most recent. And so I require data since 2002 minimum. And so that what will happen is that will give me all opportunities that started on or before 2002. And I have to put that 2002 in the second box. And then I'm going to come down here and I'm going to hit apply filters. And so once I hit apply filters, then I'm going to come up with some additional opportunities that are shown here, or not additional opportunities, but a more limited variation of opportunities that are shown based on my criteria. And you can see here the first 3 that are shown after hitting the filter or after applying the filter. And so the next process that I go through is I take a look at the average move up and the average move down. And while AMT has been higher 90% of the time, the average move down, when it has moved down, has been dramatic. And part of that is most likely because it does have an expected report date for the ex-dividend. And so that's probably going to create some higher volatility. I'm a lot more cautious when I'm looking at stocks that where the seasonal opportunity occurs during a release date, which it's going to happen often, but I am more cautious. So I take a look at that, and that's not favorable. What I want to see is I want to see the average move up being as big or bigger as a general rule. Now, the one thing that the stat is skewed because this may have only been once or maybe even twice. And so you don't really have an average move down. You have more like a one time it made a big move down, but because it only has moved down 10% of the time, that makes up the average. So I don't just automatically discount it, but it is a starting point. And then so I'll come over here to DEO. And the problem with DEO is that the volume is not that great. It does meet my minimum, but it's not one of the better volume stocks. And then again, you have a scenario where the average move up is only about half the size of the average move down, but again, it's only moved down 10%, so you can't completely discount that opportunity because of that number. And then I come over here and I look at GPN. And GPN, great average move higher compared to the average move lower, 88% of the time. Good volume since 2001. So I will go ahead and click on report. Okay, so between those three, and I just showed you the top three, you'll scroll down, there's 165 total opportunities here. But those are the top three. And so out of those top three, the best one that I can see is GPN. And so what I do is I click on report. And I will immediately scroll down. Before I do anything else, I will immediately scroll down to a section that looks like this. And the report has a lot of information in it, and I'll cover more of that information in future videos. But this particular chart is the cumulative seasonal data. So if you were to take, for example, every year between 10:15 and 10:30 as an example, and you were to add all of the movement together and average it out, that's what comes up with, that's what provides this seasonal data. So what this is doing is it's showing you that there are several opportunities throughout the year that you may want to get involved in. And so the first thing I do is I begin to generally mark those opportunities. And this is what it might look like. And so the pink is a stagnation, which means that over time, during that period of time during the year, there doesn't seem to be any kind of seasonal bias going on. Okay, and you can see that goes from January to through parts of March, and then starting in June and going all the way through maybe mid-September, and then again towards the end of the year, November through the end of the year. This particular stock does not show a lot of potential with regard to seasonal bias. However, there are two times during the year that it is very distinct. And this is what I like to see. I like to see longer periods of time of ebb and flow, and that lends itself to a higher probability of actually being a seasonal influence affecting that particular stock. So the first one is a solid buy from about mid-March to about the end of May. Okay, now obviously we're away from that, so I'll kind of put that in my futures to do look at, right? So I won't look at this opportunity right now, but the opportunity that does exist is one that begins towards the beginning of October and goes through the end of the month. And so it's about a month long, and it's fairly distinctive. And so I'll begin to look at this opportunity. Now, the yellow shade is what Season Stocks came up with. So when you take a look at GPN on the Season Stocks, it says from 10:15 to 10:30. That's what it uncovered with regard to these stats. And that is what the yellow shade is showing you. So I might be a little late for this opportunity if I didn't see it until now, because I'm already halfway through October, but I'm still going to go take a look at it because who knows, maybe GPN didn't go anywhere over the last couple of weeks and it's still a valid opportunity. Okay, but nonetheless, the next thing that I'm going to do is I'm going to move these tabs. Okay, so when you're on Season Stocks, you can click on these tabs down here with the dates, and you can move them and cover any date range that you want. So I'll move the 12/31 and I'll move it in, and I'll take the 1/2 and I'll move it in, and I will move it into this green shaded area. And I want to see the stats for this green shaded area, and that's what these do. And so once I move those in, I will click on Dollar Trades, the tab Dollar Trades, which is right above the chart. So here's the chart, here's Dollar Trades, and I'll click on that, and it will give me the stats for Dollar Trades. And as you can see, I did from September 28th to November 6th. And here are the stats based on buying on September 28th and exiting on November 6th. This particular stock, GPN, has gone up almost 77% of the time. And the profit factor is at 1061, 10.61. That's a very good profit factor. What that means is that simply divides the gross profit by the gross loss, which are these two numbers right here. So the gross profit divided by the gross loss comes to 10.61. And that's a very, very good number. And then I take a look at the largest losing year. That's an excellent small losing year compared to the largest winning year, and the average profit per trade is 88.94. Now, these dollar trades, what this is based on is buying $1,000 worth of GPN every year during this time period. So, however many shares $1,000 will buy you, that's what this is providing. And so, what that is saying is that the average profit per trade during this 1 month period in GPN is providing an $88 profit, average profit, win, lose, or draw. And on $1,000, if you're buying $1,000, what that means is that that's an 8.8 or 8.9% move to the upside. Right? So that's where you get your upside potential. So during this 1 month, GPN has moved higher almost 77% of the time. And the average profit per month is about, or the average return is about 8.9% per year, okay, during that 1 month time period. All of these are excellent, excellent stats. And so this is absolutely an opportunity that I'm going to consider. Then I'm going to take a look at the dollar trades. Okay, so here's the dollar trades from a stat. I'm going to click on dollar trades that is right next to it, and that's going to give me a trade by trade. Okay, and this trade by trade is going to show me the max percentage open gain during this time and the max percentage of open loss that occurs during this time. And so it's going to be based on a daily basis. It's not an intraday. These are not intraday stats. It's based on an end of day close basis once you get in. So as you can see here, the max percentage open gain, which means that's the highest the stock went during the time period that's being analyzed, is tremendously high. It's in the teens most of the time. You've got a 7.81% here, but that's very good. You've got 15, 15, 13, 13, 9, 8, 16, and then you've got one here that's at 2. And then I compare that to the max open loss, and you can see that's very small compared to the max open gain. You've got one here that's 22 that I missed because of the decimal point, but that's a negative 22. So in 2008, which if you'll recall, 2008 was not a good year. It actually went down 22%, and then again in 2010, it went down about 8.75%. But both of these years ultimately had moved higher to some degree. In 2010, much less. So probably this in 2010 that probably would have been a loss. But nonetheless, you can see here, even though in 2008 the low point was down 22%, the high point was up 8.818%. So that's very, very good. And then there's another, I click on the 2 here. This is 2 pages, so this is the first page. And then I click on the second page, and I get the rest of the data. And again, you can see very, very strong bullish move up during this period with a corresponding move down that is not nearly as big. So that, it's kind of subjective, but I think it's pretty easy to tell in most situations whether that's really favorable or not. And this is really favorable. So this, by all means, will meet my criteria for a possible super seasonal opportunity. All right, so GPN absolutely meets my criteria, and that's all I do to try and find these opportunities. This is the process I go through, And what I do is I try to find anywhere from 1 to 5 valid super seasonal opportunities each week. Now, this is not about taking the trade just yet. This is not about actually going in and placing or taking advantage of the opportunity. What I'm doing in this video is I'm showing you the narrowing down process because there are other factors that will go into whether I actually take the trade. So this is just the process that I go through to narrow it down to 1 to 5 opportunities each week. Okay, so GPN is definitely on the list. So I scroll down and I go to the next row of opportunities, and you can see here PFG is in there. And again, I look at the average move up. It's 4% compared to the average move down at 10%. Again, only 12% of the time that it's moved down, so I can't discount it completely for that number, for those numbers. But then you have an expected report date of 10/25, so you know there's going to be some volatility in there with that. And then I go to SYNA, Synaptics Incorporated, and again you have a bigger average move down. So that's it's a caution. It's not an elimination factor, but you also have lower volume, so it's not one of the better ones. And then I have Mattel, good volume since 1987. That's tremendous. The average move up 7.75%. The average move down is about the same, and then I have a huge net gain of about 178. Now, part of that is due to the fact that this goes back further to 1987, but what I like about the ones that go back further is that it really validates the 87% number. The further you go back and you're in the upper 80s, that's a tremendous, tremendous probability. I also like the fact that it's something that I can easily tell that, you know what, there should be a seasonal bias in this. Mattel is a toy store. It's a toy company. And what period of year are we in? Well, we're approaching Christmas. They've already got Christmas junk out at some of the stores, and it's not even Halloween yet. Right? So this is, to me, this is definitely one of the opportunities that I want to look at and explore on a further detailed basis. And so what I do is I click on report and I scroll down to the exact same place, and I take a look at the seasonal composite chart. And as you can see, wow, there is a tremendous, tremendous bullish move to the upside, starting at about the beginning of October, going all the way through about the end of November. And it's a strong bullish. It's a good long period of time, and the stats have already shown that it's absolutely valid. And so again, this is only the yellow shade is uncovering what the stats, the period that the stats were showing. And what I'm going to do is I'm going to take these tabs, here below, and I'm going to move the first one in to about the beginning of October and move the second one in to about the end of November, maybe the first week of December. And then I'm going to hit dollar trades and I'm going to look at those stats. That's the first thing I'm going to do with regard to this opportunity, but I still will go through the process of looking at and making a note with regard to other opportunities that might exist. And so the yellow is a maybe. All right, the yellow is there might be an opportunity in there, maybe not. And so that's kind of an iffy area. The pink is most likely not. It's too sporadic. There's really no definition in the movement. The bluer portion is a sell opportunity. So come July, I'm going to make a note. Look to sell Mattel in July, and I'm going to do my research, at that point. And then, of course, this green area is the best buying situation that there is throughout the board, and it makes sense with Christmas coming up. And then yellow, there might be a sell opportunity right after this buy opportunity because a lot of these Christmas stocks do peter out at during the first week of December, as you will see the more that you research into these seasonal influences. All right, so I'll do that, but nonetheless, after I narrow down my stats area to the green area. All right, and again, that's by moving these tabs down at the bottom to the dates shown, and then clicking on the dollar trades. What I see here is starting about the first or second week of October, going through the end of November. Tremendous opportunity, 84% basically. The stock has moved higher since 1987. The profit factor again is fabulous at 10.67. You have an average profit per trade of almost 8%. Again, that's based on buying $1,000 of Mattel every single year. And so that's an average trade, win, lose, or draw of 8%. So again, these are very favorable stats, and so far, so good. The next thing I'm going to do is I'm going to take a look at the dollar trades next to it. And I'm going to take a look at all of these. And again, these are all tremendous moves higher. A lot of times it's in the teens, maybe even in the 20s. But you'll see that basically in this first page, 5% was the lowest move higher. And then you take a look at the comparative moves to the downside, and you can see that they aren't that big comparatively so. There was a 3-year period here where the market did move down a bit, but again, ultimately compared to the average size that the market has moved up, certainly not a game breaker on this one. And then you can see the rest of the year is pretty good. So that's page 1. Here's page 2. Again, the move higher is tremendous most of the years. There are a couple of years in there where it's not very impressive, but overall the trend is very, very good, especially compared to the average move down. And then here's the last page of these going up through 2017. And again, you can see that there are on this one a few times where the average move down is a little bit bigger. And so that might be a little bit of a caution. It's certainly going to make you aware that these seasonals don't always just immediately go up, right? So it's something where when I take a look at this, I'm starting to think to myself, okay, I'm definitely going to implement a strategy where my risk is limited. So again, this is just the process. I'm narrowing down, is Mattel a stock that meets my criteria as a possible super seasonal? Absolutely. Mattel meets my criteria as a possible trade, but with a caution that significant adverse moves are common during the seasonal time frame. Again, the average move higher, or the maximum move higher compared to the max move lower is very beneficial, still very positive, but it doesn't negate the fact that there have been times that the market has moved lower. So, so far, I have GMP and I have Mattel as possible super seasonal opportunities for this week. So again, I'll scroll down. I'll start looking at some more. EMR, 87% higher, 1 million volume, very good. The average move up, almost 6%. The average move down, about 5%. Net gain is very good. So that one, I can tell you right there, I'm going to look at the report. With regard to RY, Royal Bank of Canada, volume a little sketchy. Since 1995, that's good. The average move up compared to the average move down, that's good. The ex-dividend, it's already released, so there's not going to be volatility with that. So that might be a possibility. And then in GWR, the volume, again, a little skeptical on the volume. The average move up, good. The average compared to the average move down, it's very good, again, since 1986. So that's another one that I might take a look at. But the first one I'm going to look at with regard to the report is EMR. And so I click on and I scroll down to the composite seasonal. And sure enough, there is an opportunity here. And again, the yellow is only based on the seasonal, that season stocks uncovered, because it's looking for short-term seasonal moves. I'm looking more for the broad context of it. And this is very, very good. And so again, I'll go through the same process. And essentially, Most of the year, I'm not going to be looking at getting involved in a seasonal in EMR. Yeah, there are some shorter term movements there, but again, the shorter term the movement, the lower the probability that there's actually a seasonal influence going on. And so I like these longer moves, a month, 2 months, maybe even 3 months long, and especially in contrast to the rest of the year where there isn't any kind of discernible movement. And so that really emphasizes the probability that there is a seasonal influence going on during this time of the year. And so, again, the green highlighted area, I'm going to take a look at the stats during the entire green highlighted area, and I'm going to bring it up. And here they are, a winning percentage, and that's going from middle of October to the first week of December. 87% higher. That's very, very good going back to 1988. The profit factor is at 16.64. That's tremendous, tremendous profit factor. And then the average profit per trade is at 6.7%. Now, this is a little bit less volatility of a stock, and you can see the largest losing year was only 6% compared to 21% for the maximum gain, or the largest winning year. And again, I'm going to take a look at the year by year stats, dollar trades, and very positive most of the time compared to the average move down. And again, you're not going to see these huge moves up in this particular stock, but you do see in the eights, a couple of them exceed 10% max open move higher. And you don't see a 10% max open move lower on this first page. And here's page 2. Here's the max open percentage gain. There is 1 year in this group of years, and that was in 1999, where this stock never moved up. From day one, you were losing. You were never at a profit. That's the only year that you see that, and that's pretty good. And again, some solid numbers compared to the average move down during that group of years. And then coming into 2017, it continues. There is 1 year again where in this group where the max open loss does reach 16%, but again overall these stats are very, very solid. And so EMR meets my criteria for a possible super seasonal opportunity with the understanding that it has had some adverse moves during the trade period. Not as many as Mattel, but it did have a couple of adverse moves. So again, these seasonals, they are not absolutes, right? There are other market factors that can come into play and override any seasonal influence that might be affecting the stock. And so you can't get into these and say, well, the market has to go up. It doesn't. And you can't get into them and then watch the market go down and say, okay, well, it's not working, because there are many times where it does move down, but then it makes back that loss and ends the year positive, right? So again, EMR meets my criteria. So I think you get the idea for the process, and that was the purpose of this video, is to go through that process. And it doesn't take very long. You can usually quickly go through these and narrow down 1 to 5 opportunities within a few minutes, because I'm going through the process of explaining it all and highlighting the areas that I'm looking at, but really it's just a glance, and either it looks great or it doesn't. And it's literally as simple as that. Okay, but what about the opportunities where the initial stats do meet my criteria, but the cumulative seasonal composite does not? And so for that, I'm going to scroll down a little further and give you an example of one that does not. So if I'm opening any of these, at what point do I say, okay, you know what, the seasonal composite is going to cause me to probably not look at this trade? Well, scroll down and look at Agilent during this time period. Agilent has very good stats at 83% going back to 1999. The average move up 7.5% compared to the average move down of 5%. Good volume at 1 million. So the initial stats here show me that this is a good opportunity. So what I'm going to do is I'm going to, again, click on the report, and I'm going to scroll immediately down to my composite seasonal chart, and I'm going to see that this is not the kind of opportunity that I want to get into on a short-term basis. The stats here are most likely just simply data fit, and that during this short period of time, there really isn't a seasonal bias, or the probability is very low that there's a seasonal bias going on. And so, with regard to this area, I would, if this is all I had, I would not buy Agilent based on this. So on a short-term basis, it's done. Now I'll go through the process, and I will consider maybe some other opportunities throughout the year, and I'll make my notes to take a look at these. But in this one, there might be a sell opportunity. I didn't mark the sell opportunity, but there might be a sell opportunity in July, which I do like because there are other technology companies that have strong bearish seasonals in July. Amgen being one that I've detailed in the past. And then you see this this spike here in March. I don't like spikes quite as much. I may make a note just out of curiosity's sake to take a look at this come March, but most likely this is not going to pan out to be anything. However, there is one that is a little bit more general and a little bit more long term than what the seasonstocks.com tool pointed out, and that is maybe a little bit more of a longer term bullish seasonal with regard to starting in the middle of October through the end of the year. Now, again, it's not near as defined as some of the other opportunities that we've seen, but this is a pretty good move to the upside during this time period. So I will go ahead and I will scroll my tabs down here, and I'll narrow it down to those dates. And this is what comes up. Uh, Agilent has moved up from about the middle of October through the end of December, almost 90% of the time. That's pretty good. The average profit factor is at 6.42. We've seen better, but it's not a bad profit factor. And then you have an average profit per trade of 11% during this time period. So it's about 2.5 months. And over time, Agilent has produced an 11% return during this time. The largest losing year, 34%. So that's going to be my first thing that I look at, and I'm like, what's the risk? And so I'm going to take a look at the dollar trades, and I'm going to see how many times the dollar trades have produced a large move to the downside during this buy seasonal compared to the move to the upside during the buy seasonal. And that's the process that I'll go through. But with regard to the initial stat, which is indicated by this yellow shaded area, there is nothing there because it's just back and forth, back and forth, back and forth, and maybe it happens to end higher. But it might be the beginning of a time period that is a little bit longer, and it might actually have a potential buy. And so I may, at that point, list it as a super seasonal for a longer term period, based on those longer term stats that I've shown you here. Okay. But again, I haven't decided at this point. I'm only going through the process of narrowing down. All right. So you can certainly create an entire portfolio of super seasonal stocks based on this method. No question about it. There are many traders who do this, who will literally have their entire portfolio is based on 20, 30, 40 seasonal stocks, and they will go in and out of these seasonal stocks. It takes a little bit more work. For me, I'm only looking for 1 to 5 super seasonal opportunities each week, and then I might only take 5 to 10 of the super seasonal trades each month. And so this is not highly, highly active as far as how I do it by any long shot of the imagination. I'm not looking to take, 5 to 10 trades every single week, which is a temptation with some people who first realize how many opportunities there are in seasonals. There's no reason to do that because there are great opportunities scattered throughout the entire year, and all you need is a few of them to go really well, and you can beat the average market move over the course of time. Tremendously beat it. So lesson 2 is going to be on determining the type of trade that I will implement with each super seasonal opportunity. So that's the end of lesson 1. I hope you've enjoyed it, and I will see you in lesson 2.